Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be taking a look back over the last few years at all of the challenges, hurdles, and obstacles both Bitcoin and the Bitcoin miners have managed to overcome, and then fast forwarding to current day, some of the challenges we're still seeing in the market and our outlook for this sector in a post-halving world. Now we've got a lot to go through, but before we do, please take a second, hit the like button, you guys. It's a huge help to myself, the channel. Anthony loves it, and it's 100% free to do. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below what your stance is on the Bitcoin mining stocks at this point in time, your current favorite or top pick, and your outlook in a post-halving world for this sector. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got our resident analyst, Anthony Power, back in the house. We're going to be going through a little bit of a look back here in today's episode, talking about some of the milestones that both Bitcoin and the Bitcoin miners have been able to overcome or prevail in over the last 4 years in this most recent cycle. We're now only a few days away from halving. Obviously, it's been a very tumultuous year for anyone invested in the Bitcoin or Bitcoin mining space. A lot of volatility, which we've talked about on the channel. But it seems, Anthony, these companies have a way of finding their way through the darkness and coming out intact on the other side. So with that being said, Anthony, welcome to the program. How are you doing today?
All good, Bryce. All good.
Excellent. Now, I know you have some travel coming up this weekend, Anthony. We're going to be putting out our March and Q1 results next week, so we're going to be looking forward to that. But looking back over the last couple of years, you've been in this space now a number of years, Anthony. Volatility is definitely something that you need to learn to live with, eh?
Absolutely. I mean, you have to go back to 2021 when we saw the sort of Bitcoin price reach the all-time high that year, and some of the reasons for it reaching the all-time high, then quickly descending as well. And, you know, part of that was with regards to Tesla. Tesla buying Bitcoin was a great positive statement for Bitcoin. And then they decided to sell some Bitcoin, which was equally an opposite, a negative statement, and the price dropped on that there. So we know that there's volatility in the Bitcoin price, and we know that certain things, whether it be economic, whether it be wars around the world, whether it be individuals trying to, do things untoward, and, they get found out. And obviously, Sam Bankman is a perfect example. FTX at the end of 2022 caused the Bitcoin price to drop to, I think, just over $15,500. And, that put miners in a really, really bad position. We saw, one big miner, Core Scientific, enter Chapter 11. We saw a number of other miners and other businesses in the Bitcoin space go bankrupt. Another couple of miners were close to going into Chapter 11. We've articulated those in previous podcasts. But you're quite right. All these things happen to Bitcoin. And what happens is Bitcoin is resilient, and it comes through those. And, 18 months later, we see another all-time high Bitcoin price. A few weeks ago. So, we have seen that resilience in Bitcoin. It does seem to bounce back. It doesn't seem to mirror what's happening in the markets, although market conditions will play an impact on a daily basis with the volatility. But Bitcoin seems to get through that. Maybe not on the same day, but literally, the weeks following, it seems to get back on track. And it's as I say, we've always highlighted the volatility, and the volatility with Bitcoin, is highlighted even further with volatility with Bitcoin miners.
Yeah, I'm glad you brought up some of those bankruptcies, the FTX collapse, obviously, Anthony, because that definitely for me felt like the low of all lows. It really did feel like there was no good news coming. Everybody had lost faith in the product itself, Bitcoin. There were some bad actors involved, and you're right. We saw Bitcoin trading hands, I think, right around the high 15, low 16s there, which now, looking back, when we're sitting at 70,000, really seems shocking that this really could even have traded in hands at that price. Now, the other thing thing for me that's kind of plagued this industry is just the amount of political, social, economic, really scrutiny that it's come under. Now, we all remember, Anthony, how bad the Bitcoin industry was viewed in terms of energy consumption. All the analogies to Bitcoin mining uses as much power as XYZ country. That seems to really have subsided now, and it's almost shifted gears into a grid stability story, economic prosperity. We're seeing a lot of local partnerships with communities. How do you think that narrative has really impacted the success of Bitcoin itself and in turn the miners?
Yeah, there's been a lot of advocates for Bitcoin and going out there and explaining some of these what's been going on. And you're right to highlight the positive side of Bitcoin there. Yes, it does use a lot of energy. No one said it doesn't use a lot of energy. But what people need to realize is it's the amount of renewable energy. It's not using 100% carbon energy. It's not using gas, electricity that way. It's using renewables. And we know that that the Mining Council have done some research in this. And I think it's close to like 60% worldwide of energy is renewable now. That the miners use, and that number's higher in North America with North American miners, because some of these big miners, will have social responsibility, to make sure that they're using as little carbon and energy as possible. And there's no doubt that many miners are using an element of carbon energy, and there's sometimes having that energy that's stranded or otherwise unable to be used. And energy gets produced and energy needs to be used, and the Bitcoin miners can do that, and they can switch on and switch off. They can switch on literally whole sites in a minute or 2 minutes at the most, and reverse that and switch them down in 2 minutes, which is great for the grid, because when the grid needs to be stabilized, you can't have 4 gigawatts of power and only utilizing 1 gigawatt of that power to make energy for the domestic supply. We talked about companies going into the Middle East, where you think the last place along with the Antarctic Circle, maybe the last place on the earth that you'd find Bitcoin miners, but actually it's Bitcoin miners that are doing really well in the UAE. Production is really good. The energy price is good, and they're utilizing that excess energy, which is not being utilized in the evenings when the temperature gets cooler and the air conditioning isn't required as much as during the day. So it's a great balancing story there, and there's a number of miners that are in the UAE and doing very well out of it. And that message is coming out there. I've wrote 2 or 3 articles over the last 3 years on this particular topic. Stronghold mining. They were getting criticism, but actually they go in there and they take away the waste materials from coal mining and convert that into energy, and then put them sites back to greenfield sites. So create greenfield sites, fields, unlike they were before. So they're doing something that's very positive to the environment. And yes, they're benefiting because they'll get some benefits from the local authorities and jurisdictions with regards to some savings and all that. But they're providing a great service there. So I haven't got any issues with what they're doing, and that story needs to get out as well.
Yeah, it was kind of ironic that they got dinged for an environmental concern, considering they're the ones that are proactively trying to help the environment, in addition to renewable energy and resources. Now, the other thing that stood out for me, Anthony, from the last cycle here, and kind of an eye-opener, I guess, was the China ban on mining as well. So not only has Bitcoin managed to root out some of the bad actors, some of the companies that maybe aren't acting in good faith have gone under. It's been able to overcome the environmental objection as well, the miners and Bitcoin together. It's also been able to overcome a lot of political regulation. So the ban in China, Ben Gannon talked about that in his interview as potentially one of the reasons the last cycle fell short of what a lot of people thought Bitcoin was going to. What was your take on that one, Anthony? And then we'll move into Paraguay and some of the more recent news, because it's interesting how history is attempting to repeat itself.
Yeah, I mean, the ban occurred midway through 2021, and we saw the global hash rate drop literally 50% overnight. And the challenge then was that actually the difficulty only changes every 14 days. So there was a part of that 14-day period where it was taking far longer, maybe 12, 13 minutes to mine a Bitcoin, because there wasn't enough hash rate on the actual global on the actual global hash rate to do it. And then obviously what happens at the next difficulty level, the difficulty reduces to take account of getting them Bitcoin back to a 10-minute block rather than a 13-minute block. So those miners in China, well, some of them moved, some of them didn't, some of them were still mining in secret. Some of them moved to different countries, and that just takes a little bit longer. But we know that when these things occur, and the China ban there, we've had countries where they've issued additional taxation. So actually, Kazakhstan took about 18% of the global hash rate once the China ban occurred, because Kazakhstan borders China. And so, it was easy for companies to literally just put rigs on the back of vehicles and drive them through the border there, and then set up warehouses in Kazakhstan, not realizing that, Kazakhstan, and having lived there for 3 years, I've got a little bit of, understanding of the country. Kazakhstan, is the 9th largest country in the world with a population of about 20 million. And so the energy grid for Kazakhstan wasn't really built for Bitcoin mining, because it's not sustainable. It doesn't have that level of power there. They create enough power to cover what they need to. And so when these miners came onto the grid, it started to have a real impact, and there was an imbalance then. And so then the Kazakh government turned around and brought in regulation, and they brought in quite severe regulation. And now that we see that in place there, it's quite difficult to actually set up mining companies in Kazakhstan. There are a few, but they're few and far between now. The percentage down there has dropped to low single digits in terms of percentage of the global hash rate. And so, again, miners moved from Kazakhstan to other jurisdictions where they would be able to, try and get hold of cheap energy. And that's one of the overarching factors. No matter what happens, and this goes back to the initial point, when you have, no matter what country, when it could be the United States, in Canada, and other countries like, countries like that, and governments will make decisions. Mining companies, have the ability to, move these rigs and go to other locations. Yes, it might take, a little bit more planning, but they are prepared to move, and they've shown they can move when these things happen.
Yeah, they sure have. Another example of resiliency and agility. And the final point I wanted to touch on, Anthony, in terms of the hardship is the financial hardship on the miners. So we talked about the price of Bitcoin really being depressed, but even once we came off that 16,000 US dollar low, these miners were really struggling financially for years here, trying to grow their businesses. We know this is a very CapEx intensive upfront industry. It's very difficult to do that with interest rate environment how it was. There's not a lot of access to debt right now. Obviously, we've seen a lot of companies opt for the ATM strategy. But in my opinion, again, a great example of how the industry as a whole was able to get creative and for the most part sustain and keep themselves together through that bear cycle. So I'd love to hear your comments on that, and then we'll fast forward to kind of the most recent events here.
Yeah, so 2021, when that bull run occurred and everyone was wanting to grow their facilities and grow their mining outputs as quick as they possibly could, they were buying literally every machine they could on the market. And at the same time, there was also issues about chip manufacturing as well at the same time. So machines were coming, even more difficult to obtain. And the price of machines, miners were paying up to $80, $90 a terahash in 2021 to grow. And how are they paying for those machines? They were paying for those machines with debt, because the Bitcoin price had rose, to 69,000 during the year. And the debt markets have become a little bit more aware of Bitcoin miners, and that was another market they could probably, lend to and use these mining machines as collateral. So they had some, payback. If the loans weren't repaid, they could take the mining machines, and they had a value. However, what they didn't understand was the price of Bitcoin and how that impacts these mining machines. So you had literally, 5 or 6 of the miners who'd grown hash rate quickly in 2021. Come 2022, when the Bitcoin price just literally started to drop from, I think it was like November 2021, and then all the way down to, we got to December 2022, and that price dropped there. These mining rigs also dropped in value, and what you found then is that the companies didn't have then enough collateral to pay the loans, and so that caused a real problem. And growth in 2022 was a real challenge. You've already said that earlier, and for a lot of miners, there wasn't the ability to get loans in 2022 as there was the previous year, because the impact was now that we've seen the Bitcoin price drop quite drastically, and the volatility was there, and we can all sit down now and say, I wish we'd have bought some Bitcoin at 15,500 December. Not many people, when the Bitcoin price has dropped from 69,000 over 12 months to get to 15,000, think that's the bottom. So that was a real challenge. But these mining machines, costing significant amounts of money, put a lot of miners in a bad position. So growth through 2022 and 2023 has been a challenge, and we've seen that now. But we've also seen a number of miners who benefited, didn't go in for the big growth. So the likes of CleanSpark, Marathon and Riot was actually slightly different. So those two companies really benefited from the early adoption on the NASDAQ, as American miners got lots of investment. So they were able to use that ability to raise significant amounts of cash. And when you've got significant amounts of cash, you can then basically, pay a lot lower prices for mining machines, because you're prepared to buy not 1,000 or 5,000. You'll buy 30,000, 40,000 machines in one order. So they were able to negotiate prices of about $30. Some even a little bit less than $30, even in 2021, 2022, when some of the miners were paying $30, $40 more than that. So you've got now probably 6 or 7 miners who are growing hash rate quickly, because they've realized how to map this out with the market conditions and use a number of levers to grow that hash rate. And the majority have used the at the market offerings, which is diluting shares, and CleanSpark have done that really well over the last 16 months, 17 months. They've grown hash rate from, I think it was 2 exahash at the end of 2022. Now it's approaching 17 exahash. So that's great, but it comes at a price. So they have sold the company and 3 or 4 times to get there, and we're seeing other companies do that now. So we're seeing IREN doing that. They've had an ATM that they've utilized quite well. Already paid now for their 20 exahash of machines. So that was an option a few months ago. Now it's no longer an option. And we see the big players are having that ability to grow. So the Riot Platforms and Marathon have got significant orders to get them into 30, 40, 50 and above exahash over the next 2 years. So, we're seeing that growth there. But we're also seeing at the bottom end of the scale, miners still having trouble getting past 2 or 3 or 4 exahash, and that's where I say there's a bit of a gap now. The haves and the have-nots, and the challenge post the halving is, how do you grow in those periods when you're getting literally half the rewards? And if the Bitcoin price rises, then the Bitcoin price benefits everybody, because a high Bitcoin price means less efficient machines can go back onto the grid and start mining, and therefore reduce the actual percentage of the grid that each of these miners currently or hope to have going forward.
Yeah, I'm glad you brought up the access to capital markets, because Rob Chang was just on from Griffin, and he said it was about a 2-year process to get his company listed on the NASDAQ. And we're going to talk in a second here about some of the barriers to entry, or perceived barriers to entry post-halving. But access to capital is going to be a huge one. You pretty much need to be public at this point to be a notable Bitcoin mining company, because it's so CapEx intensive. The other thing you brought up, Anthony, there that had slipped my mind somehow was, the whole COVID situation and supply chain. I think you had crashed your boat in the Suez Canal or something that year, Anthony, and there's some travel issues with chips and semiconductors and all the rest. But another example of how these miners were able to overcome adversity despite one of these black swan events that really nobody had kind of foreseen. So that's, in a nutshell, kind of what we've seen over the last few years in terms of what's led us to this point. Now, Anthony, we're a few days out from halving. The majority of these miners are still intact. It was a little bit dodgy there for Core Scientific, but they've managed to pull through. Now we're entering an entirely new chapter, and we talk about barriers to entry. We all know the block reward is going to be cut in half here. I think April 19th or 20th. We're going to be doing our live stream for that, Anthony. But post-halving, how do we see this world evolving? We know there's some big trends like merger and acquisition. We know a lot of these companies are cashing up, anticipating there may be some private companies on the market for sale. And we also know that the ratio between the capital involved and the reward size, now that it's going to be cut in half, is going to create quite a strong moat or quite a high barrier of entry to a lot of new entrants in this company. It's going to be quite an elite group, I think, for these publicly traded miners that have managed to navigate the path till here. How do you think this is going to change 2 weeks from now once we're through the halving, Anthony?
But I mean, for starters, the Bitcoin price is obviously key to what happens because Bitcoin price is what the base of the rewards are paid in. So we know that the drop in rewards post the halving goes down to 3.125 every 10 minutes. At the current Bitcoin price today, around the 70,000 mark, most of these North American public miners won't be, switching off. None of them switched off when it got down to 15,000. So I don't foresee any of them switching off now. And we've articulated in many podcasts up to now what these miners have been doing to get ready for that halving. They're using cheap energy. We've highlighted the companies that are using really cheap energy. So the TeraWulf, the Ciphers, Riot Platforms. And most of the other miners that aren't in that group are still paying, roundabout between 4 and 5 cents a kilowatt hour. That's a sort of standard there. So that, having that cheap energy is priority number one. The energy cost is going to be the biggest cost that a miner faces going forward. It's going to be twice as much on the 19th or 20th of April than it is today. And then in 4 years' time, it's going to double again. So, mining machines now are something like 20% of the price that they were 2 years ago. So I told you in the end of 2021, mining machines were, $80, $90 a terahash. Some of these big miners have been paying $14, $15, $16 a terahash for the most efficient machines on the market that are probably 2 or 3 times more efficient than those machines 2 years ago. So, yes, mining machines cost a lot of money and infrastructure costs a lot of money, but the energy cost is going to be significant because it just gets doubled every 4 years. And if you start using that process now, we look at 2 or 3 miners who actually listed their energy price in March. So TeraWulf had an energy price of just over 13,000 a Bitcoin, and they've been very vocal recently, especially on social media, highlighting the fact that they can mine a Bitcoin for $25,000 at the moment, and going through the halving, if the Bitcoin price holds where it is, that will go up to about 37,000 and still give them a nice profit, a nice cash profit each day, which will then utilize to reduce that debt further and keep growing the company in the same way. So that puts them in a really good position, that low energy price. IREN lists their energy price. Their energy price for a Bitcoin was 20,000 in March. That's 7,000 per Bitcoin more. And when you're looking at 300 Bitcoin, that's $2 million more for the month just in energy costs. Then we have one of the smaller miners, SATO Technology. They listed their energy price. Their all-in energy price was 22,000. So you can see, 13, 20, 22,000. Come the halving, those will double. And so that's going to be the real challenge. Also, you want to make sure you maintain growth with the global hash rate. So, we've seen the big miners, they're going to grow. They're going to get bigger and bigger, vastly bigger. I mean, 3 years ago, we were looking for a mine that got to 3 exahash. Now, we've talked about what's the norm. Is it 10? Is it 15? Is it going to be 20? What's the norm? The norm at the end of this year will be 20 because you'll have about 6 miners probably who are getting close to that or certainly have targets to get to 20 or above. And so, that starts becoming the norm. So, keeping up with the global hash rate means that you're not falling back into the pack there, and then you're having a problem. You've got to keep up with the global hash rate. So, you talk about barriers to entry. Barriers to entry will be quite challenged because it is capital intensive. You buy machines. How long do these machines last for? Are they 3-year machines? Miners are replacing S19s now with the S21s, the T21s, the micro BT latest models as well. And the S19s were new 3 or 4 years ago. So, we've had Ben on the bed and saying, actually, you don't always need to buy new machines. You can sometimes use the old machines, use them well and in the right time there. So, I don't want to say, it's all, but how long, what's the life of a mining machine? Some of these companies depreciate these machines over 2 years, and there's a reason for them doing that. They want to take the full cost out very quickly because they might have to start changing them. And you're paying a lot of money for these machines. So, are you going to get, what's the return on investment for these machines? Infrastructure. We know what people are paying for infrastructure. We saw the likes of CleanSpark have to buy more infrastructure to meet their growth requirements to get to 16 exahash and to 20 exahash, and they've done that. But it comes at a cost there. And I think we articulated in one podcast, I might be wrong, but I think it was like $8 million a megawatt in terms of what they were paying. And so, it's not cheap. So you have to build that factor in then, and the energy costs as well. So, barriers will be high, but if you can find stranded energy, a significant amount of energy, and we're seeing some of these countries now in Africa where, they just aren't using the supply that's available to them. There might be 4 gigawatts of power available, hydropower, and the local villages are using, a fraction of that. And so, if a miner goes in there and can negotiate, a really good price, giving money back to the communities, using that load that's available, that gives you an opportunity to, get through a barrier to entry. I don't think you need, a mass. It's about, managing data centers. So it's not overly technical. Yes, if you're managing 100,000 machines, it's different to managing 5 machines. But these machines are plug-in, and they have software systems now that tells you how each machine is operating. They have these firmware, and you can go in there and you can, fix machines as and when they require it, and you can identify which machine an instant is not operating at the optimum rate. So, there are some barriers, but also if people get access, it's the energy price. If you can get access to cheap energy, then everything else can probably be accomplished.
Certainly, yeah, and it's definitely been a windy road. And what I've learned in investing, Anthony, the old saying, night is darkest right before dawn, and it definitely seems to be one of those dark periods now. So if we fast forward to current events, what's going on in the landscape now? We still have aggressive GBTC selling. We've obviously got the halving coming up. We've got some of these concerns in Paraguay specifically with additional political regulation and red tape. So despite being only a couple days away from having still a number of headwinds for these companies, and that's really where we now wanted to shift gears and spend some time. So up until this point, companies have found a way to prevail. Lo and behold, we got an article put out by Bitfarms here on X last night talking about the founders of that company meeting with the government of Paraguay to overcome yet another objection here, Anthony. So a strong vote of confidence. We had done a podcast a few days ago. Ben was in communication with you saying he wasn't overly concerned about this regulation or tax coming into play. And it appears that the team at Bitfarms is all over that and has kind of put that one to bed.
Yeah, I think if you remember when we were doing that podcast, I think there was a lot of people on social media saying it was the end of Bitcoin mining in Paraguay for at least 6 months until they can sort the regulation out. And we came out during that podcast with effectively a scoop to say actually it was a load of FUD really, and there was a lot of legitimate companies in there. Yes, there are some illegal mining, and that should be, doesn't matter about whether it's in Paraguay and other countries. That should be they should be removed and regulated and made to pay taxes and everything else that a mining company would be expected to pay to do that type of business. So we managed to bring out a scoop that day in the podcast. It was very timely. I think Ben literally sent me a message as we were doing the podcast, so it was able to be put into the podcast as well. So yeah, it was a good scoop, and it's good that the company now put out a statement as well, just to show that things are online. And bear in mind, if you go through and look at where Bitfarms' growth's going to be, 40% of that 21 exahash target is going to be in Paraguay. So they really, needed it to work. And, when you're going to sort of put your chips all in on that location, you want to make sure you've done your due diligence. It looks like they've done that, but the trouble is you hear half a story sometimes, and it's Chinese whispers, and by the time it gets to the fifth person, the story's like we're going to war with somebody else, and so it just changes the narrative. And fortunately, we were able to put that one to bed very, very quickly. And it's great that Bitfarms have now come out and been more formal with the response to it.
Yeah, it certainly was. I had a couple questions saying why didn't we cover that story earlier, and the answer to that was we were waiting to touch base with Bitfarms and hear it directly from them. The other story or headline right now is the launch of the ETFs in Hong Kong, which, to go full circle, we just talked about that ban in China, which is obviously in the Asia region as well. So now the fact that Hong Kong is embracing this, obviously the relationship between China and Hong Kong at sometimes can be a little bit dicey, but there is now a general sense of optimism once again for Bitcoin in the Asian region. So I think, Anthony, the story here is no matter what has been thrown at Bitcoin or the corresponding Bitcoin miners, they have been able to find a way to overcome, to persevere, and to really prosper in these conditions. And in our opinion, the halving is just one more of these obstacles or hurdles in front of them. So I'm feeling, Anthony, 2-3 weeks from now, we're going to be looking back at this. These miners are still going to be mining. That's the one thing I'll say about this group is they're sure consistent. Even Core Scientific, despite all of the headwinds they've had, has managed to put up 28 to 30 Bitcoin a day, each and every day for the last year or so. And I think this group is going to be stronger because of that. We've talked about the diversification of revenue streams, the entrance into HPC and AI. These companies, you guys, their DNA is to be outside of the box thinkers, to be innovative, to come up with new solutions, to overcome adversity, to be pioneers. And I think in investing, you can often get caught up in the near term or the short term FUD, as you say, Anthony. But if you zoom out here, you guys, it's really a story of resilience and perseverance that we wanted to communicate today. Anthony, I'll give you some final thoughts here. How are you feeling about this group? I know the prices have been depressed. I know it's been a grind for the last couple of weeks. I saw a post last night. CleanSpark's been down 11 consecutive days in the red. Do you feel like the bottom is near, and do you think we're going to see some optimism return to the Bitcoin mining sector here once we're through this final push towards halving?
Yeah, I mean, we 6 months ago, all we talked about was really about correlation between the Bitcoin price and the Bitcoin mining stocks, and they were really correlated. What we've seen in sort of like 2024 is a sort of like a little decoupling of that there. We've seen the Bitcoin price really rally. I mean, it rallied 155% last year. It's rallied, 60, 70% already this year on top of that. And the mining stocks did well last year in their recovery year. So 2022 was like an ultimate disaster for many of the mining stocks. Most of them at all-time lows. And 2023, we saw a lot of these miners, grow. Average was about 500%. So those people that bought very early into January 2023 would have made some nice profits if they had sold towards the end of the year. Some of those profits have been lost in 2024. The prices have subsided now. A lot of the miners are down 30, 40, 50% this year. So there has been a decoupling with that Bitcoin price there. Some of them have managed to avoid that, but that was because they've had significant hash rate. And so, I think there'll be some sort of like a move back in the right direction. I don't know when. I mean, let's get the halving out of the way. Let's see what happens to, the theories. There's so many theories out there about how much hash rate is going to come offline. Initially it was going to be 30% of hash rate would come offline after the halving, all these inefficient miners. But the Bitcoin price at 70,000, we weren't expecting that before the halving. The impact the ETFs have had on the Bitcoin price, people may be moving investments from miners to ETFs, from miners to MicroStrategy, something that's more directly correlated to the Bitcoin price. Because although miners are a proxy for Bitcoin, there are more costs involved in mining than and so it's not a direct correlation. But when you're investing in a company like MicroStrategy, which are just literally buying, that's all they do now. But effectively, they are a software company, but they buy Bitcoin and keep it on the balance sheet. So that's a great proxy. The ETFs just buy Bitcoin, so that's another great proxy. The miners is different. They mine the Bitcoin, and in times when the Bitcoin price rises, the hodl position looks really good, and in times when the Bitcoin price falls, we all wish we'd sold some of that hodl. So there's swings and roundabouts to having the hodl, and we've had many presenters come on our podcast articulating that fact to us. And so I'd like to think that if the Bitcoin price sustains where it is, and these miners are still mining post the halving, and still profitable, then the price will start reflecting that. You know, that, as I say, there's still a lot of uncertainty with regards to mining stocks. I mean, you know, not many have made any profits in the last couple of years, if any. And when I say profits, I mean profits from mining, not just about just talking, you know, the cash elements like that. You know, so 2024 could be a better year for some of these miners, and you know, we'll see what happens post the halving. But if Bitcoin price continues to rally, the miners will have to, start to appear more opportunistic for investors, because, you know, they are producing Bitcoin, and so the revenues will be increased and the margins should increase as well at the same time.
Yeah, that's definitely my thinking, Anthony. It may take a little longer than hoped, but I think these miners will do just fine, and they will recover and catch up to Bitcoin and act as that leverage play that we're all looking for. And if I've learned anything, Anthony, in my last few years doing this, in the Bitcoin space, it's to expect the unexpected, because every single time you think you understand or you think it'll be the same as last cycle, Bitcoin and the Bitcoin network seems to throw a curveball at us. So there you have it, you guys. Bitcoin is coming up on its fourth halving epoch in a few days. It's been able to overcome every single concern that the world or anyone in the world has been able to throw at it up until this point. The miners have been there mining and supporting the network and the infrastructure, as they're a core member of the Bitcoin network itself, along with it. So time will tell, obviously, who is right here and who is wrong, Anthony. But in my opinion, these companies and Bitcoin have been able to overcome anything that's been thrown at them up until this point. And I would assume that would continue for the foreseeable future here. You guys, thanks so much for the time today. Hopefully this instilled a little bit of confidence, especially if you've been concerned about your portfolio and watching that value go down over the last couple of days, weeks, months. We definitely still have optimism for this sector. There's a lot of activity going on, a lot of preparation for this halving event. And I think these companies, given their balance sheets, their exahash, their efficiency, their diversified revenue streams, have really put themselves in as best position as possible going into this very unique event that you don't see in a lot of other industries. So if you're still watching, hit the like button, you guys. Hopefully you found some value. Hopefully this instilled some confidence. Let us know in the comment section below if you've been shaken out of the miners or you're still holding strong, and your top pick for 2024. And with that, you guys, we'll see you in the next video.